Chapter 2, Global E-Business and Collaboration. So this chapter talks a lot about some of the different types of information systems, the purposes that they're applied to, or the different processes that they're used to address in an organization. And it talks about this idea of collaboration. That's one of the reasons that we have in this class a group project. It's because they really stress this idea of collaboration, of being able to work with your peers to be able to produce something. And we'll talk about why that's important in this chapter. So in this chapter, learning objectives define and describe business processes and their relationship to information systems. Don't freak out about it. It's a process. It's exactly what you think it is. You've got to do something. You've got to break it down into smaller steps. A process, step 1, step 2, step 3. This class, for example, first step, you've got to enroll in class. You've got to buy your books. You've got to come to class. You've got to take the assessments, the tests. You graduate, or you pass the class. You take the rest of your classes to satisfy your degree. You graduate. So it's a process, the various steps that you go through to go through that whole process. Evaluate the role played by systems serving the various levels of management in a business and their relationship to each other. So we're going to talk about different types of information systems and the fact that they're not only are they related, but they also have specific unique purposes depending on where you are in an organization. Explain how enterprise applications improve organizational performance. Explain the importance of collaboration, teamwork, in business and how they're supported by technology. And assess the role of the information systems function in a business. So it starts out and talks about the America's Cup, which seems kind of odd. I mean, having a computer on a boat, on a sailboat, especially a racing boat, seems kind of odd. But when you start to read through the case, it's kind of interesting some of the technology that they've applied. They're not using a traditional sail. They're using a modified sail that adjusts the shape of the current needs. It has sensors all over the boat to assess the water, to assess the wind, the angle of the wind, the speed of the wind, all those various things. And it can adjust the shape of this wing, I guess if you want to call it that, to optimally capture that wind and propel the boat forward. And as a result, not only does it end up destroying the competition, it ends up basically being what they believe the fastest wind-powered boat to ever exist. I don't know if that's fair or not, if you read the case and if you noticed the one particular part on it, they talked about the fact that the computer, the database that's processing all this, was on a separate boat. Personally, I would think that might be considered cheating in some fashion. I assume it was not against the rules or else they would have been disqualified, but it just seems cheating a little bit to me. I thought it was kind of interesting though, to be able to apply technology in that fashion to something that's been around for so long. So, a business process. Workflows of material, information, knowledge, sets of activities and steps, and may be tied to functional area or be cross-functional. So it's exactly what you think of when you hear a process. Again, you've got something to accomplish. You've got a degree that you want to earn. You've got to register for classes. You've got to look for your degree. You've got to be accepted at the university. You've got to decide on a degree. You look at the degree plan and choose the classes that you're going to register for. You register, you buy the books, you take the classes, you pass. That's a process that you go through with various steps along the way. Businesses can be seen as a collection of business processes. So if you want to look at the various aspects of a business, their production, for example, they got to produce some kind of a product. If you look at their sales, they've got to contact customers. They've got to take orders. They've got to ship product once it's completed. They've got to bill. They've got to process payments and things like that. So you can look at a business as a collection of various processes that are going on. Business processes may be assets or liabilities. Anybody have an idea what they're saying there? What are they saying? What do they mean when they say business processes may be assets or liabilities?
Could be a competitive advantage if you're UPS or you're using old systems. It actually slows you down.
That's exactly it. If your processes, you've gone in, you've evaluated your processes, you've made sure you're not wasting time, you're not wasting money, you're doing the most you can with the least amount of cost, so you're going to be more efficient. That's going to give you a competitive advantage over those that are way wasting money, those that are wasting time, those that are spending extra resources doing that same process because they're doing it poorly. So it can be give your company a competitive advantage. At the same time, it can be a liability. If you're the other company, you're the one that does things poorly, you're spending more money every time you produce a product than your competitors. That makes it hard to compete. So it can be an asset or it can be a liability. Examples of functional business processes, manufacturing and production. You know, especially if you're a manufacturer, you're producing something, you're an automobile manufacturer. You've got to go through the process of acquiring raw materials. Most car manufacturers don't manufacture tires, but they've got to acquire the tires from tire manufacturers. They've got to acquire the steel. They've got to shape the steel. They've got to go through this entire production process to be able to produce an automobile. So that's a process. Sales and marketing, again, identifying customers, contacting them, whether you're sending out emails, you're sending out mail things, you're advertising on billboards. You've got to talk to those customers, and ultimately you want to translate those leads into sales. So hopefully you're getting a hold of those customers, getting them to call you or calling those customers and getting them to actually place an order. Once you've got that order placed, now you can go and ask them for money and actually process that order and get that money somehow. But that's a process too. Do you only take cash? You're going to process credit cards? You're going to do bank drafts? That's a process. How are you going to handle that? How are you going to handle a customer that doesn't have a credit card? We think about it all the time in this country, especially. We assume everybody has a credit card. That's not true worldwide. The internet's global, but not everybody has credit cards. Certain areas of the world, people don't trust credit cards. Credit cards are extremely expensive. The liability in this country, we're limited to $50. If somebody steals our credit card, we're limited up to $50. Most banks don't charge us that if somebody fraudulently charges something on our credit card, but that's all we're liable for. In some countries, you're liable for everything. So if somebody goes out and buys a car on the credit card, you've got to pay that. So in some places they don't take credit cards, or people don't use credit cards for reasons like that. Human resources, hiring employees, finding employees. You've got a process for that. Maybe you use Monster.com as a company. You use Monster to identify employees or potential employees to kind of do that initial screening. Especially in today's job market, you've got one job and you've got 500 people applying for it. You need some kind of way to very quickly and efficiently cull out the ones that obviously are not going to be good picks for that particular job position. So we use information systems to do things like that, and we develop a process to say these are the criteria that we need that particular employee to fulfill or benefit our company with. So that's what we're going to look for. So we have a process to be able to identify those potential employees. So we use processes throughout an organization in a lot of different scenarios. And there's just a few examples. There's a lot of examples. We use them all the time. Those processes interact with each other. So again, going back to a business example, you might have sales. You generate a sales order. That order gets submitted to the accounting department because if you sell a car, you want to get paid for it. It's not good to let it go off the lot and not get money for it. Generally gets you fired. So you got to run some kind of credit check. You want to make sure that I can afford it. My car was not expensive, but I drove in like a 92 Ford Tempo with 230,000 miles on it. That's a credit risk if you're seeing that drive in. But I got approved, so I got my car. And they want to generate the invoice because they want to make sure that I'm going to pay. They also have to produce, in some cases they're going to have to produce, in this case the car is already produced, but they produce the product. So all these various processes, I guess my point is, all these various processes interact together, so they're not operating in isolation. So you can have a very efficient sales process, but if you have a very poor accounting process, you don't get paid, the organization kind of falls down. It doesn't do the organization any good to be giving away product because they can't collect the money. So the processes do interact and they do impact each other. Business processes and information systems. Information technology enhances business processes in two main ways. This one's pretty obvious, increasing the efficiency in existing processes. Go back to that UPS example or FedEx. The reason they're able to ship so many products so fast and accurately is because of information technology. some of these sorting centers, and we'll see that in the video here in a little bit, these sorting centers, there's no way they could operate as fast and as efficiently and as cheaply as they do if they weren't using technology to automatically sort and process a lot of these packages. If you had to pay individuals to do this, you couldn't do it. You couldn't afford it in today's marketplace. I don't remember the details of it, but the concept for FedEx, when FedEx first got started, it was, have you heard this story? It was essentially a paper that was submitted in a graduate program. And the professor told him he was nuts, it would never work. And this is the guy that started FedEx. I suspect the guy that started FedEx got the last laugh on that one, but you know, technology allows you to do these things. If you don't, the efficiencies that you get from technology really don't allow you to, in some cases, to do things, different things that you couldn't normally do, but they do allow you to speed up that efficiency to handle more volume than you otherwise could. Enables entirely new processes that are capable of transforming the business. So in some cases, it does allow you to do things that you couldn't previously do. Think about movies. You can deliver movies across the internet now. That's not something you couldn't do before without technology. At best, you could ship somebody a DVD with Netflix, or they could go to Blockbuster and rent a video. But with the ability to stream stuff across the internet, now all of a sudden you are able to provide a new service. It's something that's a little bit different. It's still delivering a movie, so in that sense it's the same thing. But the convenience of it changes the market significantly because they're able to give it to you on demand. So some of the different types of information systems, there's a lot of different types. We're going to talk about just a few. Arguably, the transaction processing system is the most important one. It's very basic. It's probably the one that's been around the longest. But as you're going to see from some of the other systems that we're going to see, not only does it perform its purpose, but it also supplies the data as input to a lot of the other systems. So a lot of the other systems rely on data from the transaction processing system in order to be able to function. And we'll talk about that when we get to some of those other systems. So transaction processing system. It's a transaction. It's processing transactions. So you place an order with Amazon.com. You type in your information for your account. You've already got your customer information in there, like your name, your credit card number, all that. You've placed an order for 2 of some book or 3 of a movie or whatever it is that you happen to be buying. That transaction processing system takes care of all that. It keeps track of who placed an order for what and what method of payment that they're using to make that payment. So that's what a transaction processing system is. The reason it's been around for the longest, or at least one of the systems that's been around for the longest period of time, is that's initially what information systems were about. They came into corporations, into the accounting departments, really to do nothing more than process paychecks. Why? Because large corporations wrote a lot of checks, a lot of paychecks. It's a redundant feature. It's something that's done over and over and over again. The only difference is who the check's made out to and how much it's made out for, based on the information in the transaction processing system. So it's a very simple calculation to do. Computers can do it very fast and very efficiently. And so, we're pretty good at transaction processing systems. We've been doing them for a very long time. Transaction processing systems operate at a certain level in the organization. They operate throughout the organization, but they really, where they interact most within an organization is at the line level. Our salespeople are dealing with. They're the ones that are processing various sales items as they go across the counter. You go to the grocery store, you're scanning things. And that's important because, again, like I said earlier, it feeds into other systems. What happens when we sell something at the store? We make money, that's great. We also lose an item out of inventory. So that transaction processing system impacts our inventory control system. We've got to take a unit out of inventory when we do that. So the problems that we're facing with a transaction processing system are predefined. We know that there's some basic things that are going to happen when we process a transaction. So they're predefined, structured goals and decision-making tools. We know that we're going to sell 1 unit of this product, we make this much money, and we lose this much inventory. It's, regardless of the product, it's the same process for each product. So you see something like this, and you see a transaction processing system for payroll, processing payroll transactions. You can see that it's going to impact a number of different systems. We've got our employee database that's going to have employee number, name, address, all those types of things. But it allows us to do a lot of things. It becomes the input for a lot of other systems. So we can do a query. How much does XYZ employee make? Or what are their benefits? Those types of things. We need to process their paychecks periodically. Employees like to be paid every week, apparently. Government agencies, they like to collect their taxes, Social Security, FICA, all that stuff. Managers like to make reports. How many hours are we working? How much are we paying in overtime? Maybe we can do something. Maybe we need to hire more people, so we're paying less in overtime. Maybe we need to do more overtime and not have as many full-time people. And then general ledger entry. So a transaction processing system impacts a lot of other systems. They interact a lot together. Another one is kind of this generic term, MIS term, Management Information Systems system, which is really geared towards middle managers. It's a little bit higher level system. And it's populated by the transaction processing system. It may draw on other data from other places as well, but that's a big part of it. It allows middle managers to make decisions about, how many employees do I need to schedule for work this week? They want to be able to base those decisions on some solid numbers. They can look at their sales that they've traditionally had from week to week. They can compare it to the previous week. They can compare it to the same week last year. So they can make decisions based on numbers that have happened historically. So again, there tend to be pretty structured types of questions and answers that those systems provide. So you might see, again, from various systems that it's going to try to organize information so that a manager can print out reports and say, okay, we're spending X, Y, Z, this amount on overtime. We don't want to do that anymore. That's why we're only going to have 2 lines open, even though it's the busiest day of the year. We're going to have 2 tellers at the bank, and that's it. So everybody else gets to wait in line. So you end up producing a report. It kind of allows you to make that decision and justify it to your managers that this is why we made that decision. Hopefully you made a good decision, because the report's the report. You're the one that has to justify the interpretation of that report. Decision support systems also serve middle management. These tend to be a little bit less structured. What happens when something changes? There's a new competitor that moves into town or something like that. So now all of a sudden you've got more of an unstructured question that comes to mind, because you haven't dealt with a new competitor coming to town before. So what impact is that going to have on your sales? How do you need to schedule your employees' work schedules now? Do you need to have more so you've got better customer service? Should you have less because you're going to expect less business? It puts more onus on you as a manager, because you've got to look at the data provided by a decision support system and say, this is what it's telling me. This is why I feel that I should schedule more people. Often uses external information as well as the transaction processing system and MIS information. So again, it's drawing from multiple sources. You don't just want to draw from a transaction processing system when you start making more complicated answers, or when you start addressing more complicated questions. Got a couple of different approaches, either a model-driven approach or data-driven approach. They talk about that in the chapter. They give you a couple of examples. When they talk about data-driven, it really has more to do with data mining. And in that case, you may be depending a lot on transaction processing systems. You may also be depending a lot on external data as well. You're literally looking for patterns in the data. And from a research perspective, that's a horrible way of doing things. And from a research perspective, you're supposed to formulate a hypothesis first and then go out and see if the data supports the hypothesis or not. From a business perspective, you tend to not really care why. You just want to see the relationship. You don't care why diapers and beer are both sold together. You don't care. You just want to put them together at the grocery store because they sell a lot together. It's a strange relationship, but it occurs. Versus model-driven, where you've spent more time thinking about the relationships between various things, and you apply that to the data to see if it holds up. So it's a different approach. It's looking at the same problem, but it's looking at them from different perspectives. talks about those examples in the book. Both of those are types of an MIS, a management information system, and a decision support system are types or pieces of a business intelligence system. Business intelligence is kind of a more recent buzzword that you've seen in the industry. It's really kind of a step up from decision support systems and management information systems. And it's this idea that you're capturing knowledge, that you're capturing things beyond just data, beyond just information, and able to store that and share that down the road. The idea being that especially in certain fields, and especially certain fields where employees are very expensive, that by having them blog about things that they're doing, by capturing some of their thoughts and opinions, how they handle a project, and getting reports back when they complete a project, this is what worked in that project, this is what did not work in that project. That if you can capture that information, when that employee leaves, somebody steps in to fill their position, maybe you don't have to pay them that $160,000 a year. Maybe you can get somebody to come in for $120,000 a year. It's not quite as good. They can use that repository of information, and they can kind of step in those shoes and do the same job with that more expensive employee. It's arguable how well you can actually capture certain types of knowledge. There's explicit knowledge, things that are easy to quantify, things that are easy to codify. So things like if you know 1 + 1 = 2, you can codify that. You can show people, mathematically that exists. But there's also tacit knowledge, and that's information or knowledge that's not easily captured. It's how do you know that? Well, I don't know. I just know that. Stuff that you can't really explain. How do you write that down? How do you blog about that? How do you put that in a knowledge management system to be able to share it with others in the first place? So, there's some arguability with respect to business intelligence and how far you can go in capturing knowledge and sharing knowledge. But certainly firms that do a good job of it do a good job of it. They're able to really have some efficiencies that other organizations aren't able to have. So there's got to be something behind that. So executive support systems, as the name might kind of imply, this is really up at the top of the organization now. Now we're talking about really unstructured problems that they're facing. Should we move into Europe as an organization? Do we want to go into that market? We've never been there before. Different laws, different customs. Walmart, for example. In Germany will not allow Walmart to build one of their stores the way they traditionally have built their stores. So as a result, Walmart has had to modify how they do their stores. They have to move into existing structures, at least in some cities, into existing structures, do certain modifications that they're allowed to do, so they don't have these great big monster stores like they do here. So it's an unstructured problem that they're facing, an unstructured problem that they have to address. And an executive support system tries to help them to gather information from various sources, say perhaps information about competitors that have done it successfully, competitors that have done it unsuccessfully. Look at that information, see what they did wrong, see what they did right, and then based on that, those executives are able to make a decision, hopefully the right one. So that's what executive support systems are really about, addressing some of those non-routine decisions, non-routine questions. Let's see, types of information systems from a constituency perspective. So one of the ways we can look at it is from who's using those various systems. We've talked about some of the basic systems, transaction processing systems, MIS, and executives. So everybody's seen the pyramid, right? At the top of the organization, you've got executives, and then you've got middle managers, and at the bottom, you've got peons. And that's where the transaction processing systems work. That's where the people that are processing payments, processing sales, things like that, that's where the most interaction is going on, the most data gathering is going on. Then the MIS is kind of in the middle of that triangle, and then your executive support systems are at the very top. So very few users, more sophisticated systems because they're not structured questions that are being asked of it. So you can kind of think of it of some of these different systems from that perspective of who's using them. The relationships of a system to one another is another way you can look at them. So transaction processing systems, that's the source of an awful lot of your data. You're not just storing that data. In fact, that was a big problem for a long time. Corporations were gathering lots and lots and lots of transactional data, and they weren't doing anything with it. They were morons. For decades, they were capturing this data in COBOL and doing nothing with it. They didn't start to realize that, wait a minute, we have a lot of information in there, data that we can mine, some of those relationships that we can look for. And they've started to use that, and I say they've started to, they've been doing that for a while now, but for a long time they were just sitting on it. But that data feeds into a lot of these other systems, and that's important to keep in mind. Executive support systems, recipient of data from lower level systems. So it's going to draw on the data from the transaction processing systems, from the management information systems, from the decision support systems. Data may be exchanged between the systems, so they share data. Makes sense, or it should make sense to you at this point, since they're drawing on data gathered as input from here. They've got to be getting it somehow, so they're sharing data between each other. In reality, most business systems are only loosely integrated, but they are getting better. We'll talk about that here. Here in enterprise applications. I'll come back to that in just a second. But as far as that loose integration, what we tend to do, what organizations have typically done is you don't just have a Fortune 500 company that opens its doors one day. They typically have grown up over time. They've acquired other businesses, they've developed a market, and as they've grown, they've addressed various problems as they've come along. So they have a problem that comes along, they install a system to address that problem. As they continue to mature and become an older organization, another problem occurs. They install some other system to address that problem. Over the years, they end up acquiring all these various systems that address problems separately. And they end up getting to a point to where they're supporting a lot of different systems. And maybe those systems talk to each other, maybe they don't. And that's what they're talking about here, that some systems are only loosely integrated. What happens when they're not integrated?
Somebody has to rekey it out of one system to another.
Yeah, you got to pay this person to sit there and read the computer screen, and close that window, or have two monitors, and rekey it into another system, from the transaction processing system into the decision support system. What's wrong with that? Say again? Yeah, very time consuming, cost money, errors. If you manually type stuff in, errors. And if you're a database person, that will drive you nuts. You're purposefully inputting errors. When I say purposefully, it's not like the person keying them in is doing it, but you have created a process that manufactures errors. It's just, it's a horrible situation. So what you end up with is certain solutions. There's solutions called middleware, which this chapter doesn't talk about, but you can create middleware, which will take the output of one system, transaction processing system, and produce input for the decision support system, or one of the other systems that's higher up the pyramid. So you can do that, but that costs money. Or you can go with what we're going to talk about here in a second, an executive support system, or an enterprise system, which kind of does all that for you. Did anybody read that case over Domino's? Anybody ordered Domino's pizza and watched that thing? I have. I thought it was neat. The geek in me coming out. But it's really something that gives them information. It gives them, from an executive perspective, it gives them a lot of visibility into what's going on in their stores in terms of how long it's taking them to process pizzas, who's doing what when. It gives them a lot of visibility. What orders, what types of pizzas are being ordered in different parts of the country. They can supply products better to their individual franchise stores. So it was a very interesting case, I thought. As college students, I think you'd read up on pizza stuff. So anyway, if you haven't, order something from Domino's and watch the little bar go across. It's kind of neat. Types of information systems continue. What we were just talking about with enterprise applications. ERP is a big buzzword, and it has been for a few years. And I kind of have mixed emotions about ERP, enterprise applications. And the reason I say that is for large companies, what an ERP system does is it really allows them to integrate those systems. It allows them to integrate their human resources systems, their payroll, things like that, transactions, their inventory. It allows them to integrate all that together so they're working off of a single database. That's great. Say, for example, a customer calls in and places an order. It's the first time they've ever ordered something. You get their name, you get their address, their payment information. You ship the product to the address that they give you. 6 months later, that customer moves. 6 months later, that customer calls in, places another order, and gives you a different address. Well, if you're storing that address in two different places, one in, say, the credit department and one in the shipping department, unless they both get updated, chances are you might ship that product to the wrong place, or you might bill the wrong place. So it's not a good system. If you've got something like an enterprise application, it's in a single database. So when you update that address, it's updated throughout the system. So the credit department knows that it's been updated, the shipping department sees the same address, everybody sees the same information the information that they need to see. Obviously, human resource information, employee information, personal information, it's in one place, but it's only shared with the people that need to share it. Needs to be shared within the organization. So from that perspective, enterprise applications are really nice. They really serve that function. The great thing, one of the great things about them is they're usually based on industry best practices. So it forces an organization to adjust to comply with industry best practices. Things that have been researched for a long time, things that lots and lots of researchers have agreed that says this is how you should manufacture products. This is how you should handle human resources. This is how you should handle marketing. This is how you should handle inventory. That's great. What's wrong with it?
That don't always fit your operation.
That's a big part of it. If you're an organization and you've been successful all this time, and now you got to make all these changes, you're kind of giving up who you were to do that. At the same time, if you and everybody else in the industry is going to an enterprise system that's based on industry best practices, how are you any different than your competitor? It makes it hard to be unique in that type of environment. So there are some pluses to it, but there's also some negatives. It's really hard to do. Usually in an enterprise system, you can kind of piecemeal it. You can put pieces together and add to it over time. University of North Texas has been going through that process for a good 10 years that I'm aware of, and probably longer than that. And they, every few semesters they add another piece and ticks off a bunch of users because they have to learn something new. But over time, it's gotten quite a bit better, and to the point that you can do virtually everything online. When I first started going there, you had to go over to the Coliseum and walk around with a card and register for classes. And that was not fun. But now you can do everything online and keep track of what you're paying, the classes you're enrolled in, all that type of stuff, financial aid, stuff like that. 4 major applications of enterprise systems, enterprise applications, enterprise systems, supply chain management systems, CRM, customer relationship management systems, and knowledge management systems. These all are doing something similar, but they're doing it from different perspectives. So if you look at it again, you go back to that pyramid, we're talking about enterprise systems, it's really trying to appeal to the upper management, to give them a consistent view throughout the organization. It gives them a view of the organization that's not going to have different perspectives. That can be good or bad, but some people like it. CRM, customer relationship management systems, focuses more on the people side of things. It's really about relationships and dealing with customers, whether those customers are dealing with people, whether they're customers, they're your suppliers. It's dealing with them on a more personal level so that you know who they are, what they're supplying you, when they're supplying you, things like that, so you can really deal with them at a more personal level. From a business's perspective in dealing with a customer, you like to be able to know that this particular customer that's calling back, the last time they ordered was this long ago. This is what they purchased. This is the feedback that they gave us. They were happy. They weren't happy. Why weren't they happy? What happened when they weren't happy? The last thing you want from a customer's perspective is to call in and, I've had a problem. Oh, I've never heard of that problem. Whoever you're talking to doesn't even know you've had a problem. So you get transferred. You've got to explain your whole story again. You get transferred. You've got to explain your whole story again. It drives customers nuts. They don't like it. With a CRM system, you should not have that problem. Now, I say that, be careful when you hear CRM. In industry, a lot of times, you will hear people throwing out CRM all the time. They'll talk about it. It's not anything different than business has been for however long business has been around. You have to deal with customers. The better the customer service that you have, the better your organization is going to do in terms of having customers come back and purchase things. CRM can also be thought of as a class of software that helps to facilitate that idea. So in terms of the idea is nothing new with respect to CRM. The software, though, does help you facilitate that a little bit better using technology. Supply chain management focuses at the other end of the spectrum. It's dealing back upstream, dealing with suppliers, dealing with the product itself. That's where the focus is do we have product on the shelves? When is the replacement product coming in? When are we expecting the existing stuff to go out? Those types of things. The idea is that it really helps you to streamline your supply chain so that there's very little product in the supply chain. We want to keep that product down if we can. We can reduce our insurance. We don't have to have as much storage facility to be able to store that product. That's good stuff. We don't have to pay for the product. It's great. The best of everything is that when we sell a product, the replacement shows up on the shelf. We sell that, and so we've got this smooth running supply. That's the ideal situation. We don't want to stock out because we lose a sale. But we don't want 10,000 widgets sitting there either because we've invested money, we're paying insurance, we've got to pay for storage. It's not a good situation. Supply chain management is supposed to help us to do that. And one of the ways it does that is it opens up our inventory systems to our suppliers or to our customers if we're a manufacturer, maybe to retailers. They can see what we're producing. It opens up those systems so that everybody can see, has some visibility into their partners in that supply chain. It helps them to avoid what's referred to as the bullwhip effect. That if you can't see what you're being supplied, you tend to order too much. And the more you do that, then the manufacturer thinks, oh, well, the demand is peaking, I need to produce more. And then you end up with these wild fluctuations in supply. And it's something that you just really can't have in a smooth functioning supply chain. And then you've got knowledge management systems, which are really designed to, what we were talking about earlier, push that knowledge out to a lot of those line workers, to be able to get better responses from some of your lower level employees because they can go to a knowledge management system and get the answer. Anybody Google the problem, they had a problem with their computer, you Google it. It's a knowledge management system essentially. You're looking for the answer. Somebody else has seen that problem. With Google, chances are pretty good you can find a solution. So enterprise systems collect data from different firm functions and store data in a single central data repository. So they have that single perspective, that single view, that one address for that customer. Resolves problem of fragmented, redundant data sets and systems. It enables coordination of daily activities, efficient responses to customer orders. Why? Because regardless of who answers the phone, they pull it up on the system, they all see the same information. They all know where that order is in terms of processing. It's waiting on credit approval. It's stuck in production. It's ready to be shipped. Everybody sees the same information regardless of the department that they get a hold of. Okay. Supply chain management systems manages firm relationships with suppliers, share information about orders, production, inventory levels, delivery of products and services. This is a little bit different perspective than what you used to see in business because in business you used to see everything was proprietary. You did not want to share that information. You didn't want to open up your systems to your suppliers or to your customers. They might share that information with other organizations. We don't want to do that. We're private. We don't want to do that. We don't want to give away our competitive edge. Well, you're starting to see more and more firms do this because they see the necessity of being able to streamline their supply chain. You also see that concern reflected in some of the contracts that you see between some of these organizations as well. that this is a very tight relationship between these companies, and there's contractual agreements that say you will not divulge this information to their competitors. You will not work with the competitor for so many years after your relationship ends. Things like that to help try to protect some of that information. So the goal is to have the right amount of products to destination with the least amount of time and lowest cost. Again, you don't want 10,000 widgets sitting on the shelf. Any questions so far? Customer relationship management systems provide information to coordinate all of the business processes that deal with customers in sales, marketing, and service to optimize revenue, customer satisfaction, and customer retention. Those have been the goals for years and years and years and years, ever since the caveman had sold the first tire. That's the way it works. That's how you get customers to come back. So there's nothing magical about CRM in terms of the concept. It's the technology, it's the application of technology to help you do a better job of that is important. So when you hear the buzzword, don't think that it's some kind of magic bullet. It's not. You've got to understand that when you go out and purchase a CRM package, what it's going to do for you and what it's not going to do for you. If you listen to the salespeople that are selling you this package, they're going to present it to you as if it's a magic bullet. It's not going to be. You have to understand what it's going to do, what it's not going to do, or you're going to be let down. Integrate firms' customer-related processes and consolidate customer information for multiple communications channels. So again, it allows you to really, the focus, instead of an ERP system and being on the internal workings of the business, the focus with CRM is on the customer. So that if a customer emails you, they call, they show up at your store, at a retail outlet, regardless of how they get a hold of you, whoever's dealing with that customer has access to the same information about that customer, so that the customer doesn't have to explain that 3 and 4 times their problems. It really makes that experience a lot better for the customer. And then knowledge management systems support processes for acquiring, creating, storing, distributing, applying, and integrating knowledge. Again, in some ways it's a difficult process to be able to capture some types of knowledge, but you can, in a lot of cases, do some of that and help to push down some of the experiences, the knowledge, the expertise of higher level workers down to the masses. Think about WebMD, for example. It's a lot of people will go to WebMD to get some kind of a diagnosis. I don't want to go to the doctor. I don't like doctors. This is a way to avoid that process. If your leg's cut off, you probably ought to go see a doctor. But if you get a sprain, maybe you don't need to. So you can go check out something like WebMD and draw on the knowledge of experts, which is actually an expert system. They're pretty closely related. Let's see, alternative tools that increase integration and expedite the flow of information. Something that's kind of related to all these processes or all of these types of information systems. Go back to supply chain management. We have to open up our systems to be able to share them with each other. Everybody's heard of these two? Intranets, Extranets. I know you can see what they say. Basically, when you think intra, it's internal. It's protected. The idea is that everybody knows how to use the internet. Does anybody not know how to open a browser? Because you got a real problem in this class if you do. Everybody knows how to use a browser. There's not a lot of training associated with that. And that's the idea behind an intranet, that inside an organization, you can build a system that uses the same infrastructure as the internet, that uses web servers and uses web browsers. Unlike the internet, though, it's private. An intranet as opposed to the internet. So an intranet's private, protected by usually a password, firewalls, things like that. So it allows you to put all this stuff in a format that users can use easily because they know how to use a browser and they can access it, and it's protected from the outside world. This is kind of the opposite of an extranet. An extranet says the same thing. Everybody knows how to use a browser. It's very easy. There's not a lot of training involved. Click on the E or whatever, and you're good to go from there. But an extranet says there are some people on the outside of your company that you need to share information with, but not everybody. So some of those suppliers that you want them to be able to see that you don't have any more toilet paper on the shelves at Walmart, Maybe you let them log in and they can see that Walmart's out of stock of those items, and they can deliver those items themselves. You can turn over part of that restocking function to one of your suppliers. It allows them visibility into your organization. It's an extranet as opposed to the internet because you want to password protect it. You do want to only allow certain individuals to see that. You don't want everybody to log into your systems and see what your inventory is. Just certain people. And so you protect certain parts of your site, and it becomes an extranet. Everybody got that? You clear on that? Another perspective is looking at e-business, e-commerce, and e-government. And you see e-commerce and e-business thrown around a lot, and a lot of times they're used interchangeably, and they're not quite the same things. It's kind of a similar relationship between information systems and information technology. How IT is a part of IS, but IS is more than just IT. Same thing with e-business and e-commerce. E-commerce is a part of e-business, but e-business is more. So e-commerce is pretty much what you think of. You go to Amazon, you make a purchase. That's a commercial transaction that's occurring. They're collecting your name and the order information. They're processing your payment. That's e-commerce. E-business takes that quite a bit further. It says we're going to run much more of our business electronically. We're going to use technology to manage our workers, to schedule them. Here's your schedule. We're not going to post it on a board somewhere. You're going to log into a system and see what your schedule is. We're going to pay you electronically. We're not going to print out paychecks. It wastes paper. It takes time to process stuff, to print this stuff out and deliver it. We're going to do that electronically. We're going to pay you electronically. So we move a lot of these traditional business functions that were really about pushing paper from point A to point B to point C. We're going to move those into the electronic world and do them electronically. That's e-business. We can do things much faster, much more efficiently that way. So it's e-commerce is a part of e-business, but e-business is much bigger in scope. You see a lot of the back office type things that are done through e-business. E-government is just basically the same thing, applying a lot of the government services that you can get through the internet, through electronic means. I don't know about today. I know several years ago that Texas was #1 in the nation in terms of moving things to the internet, being able to provide functions or provide services to customers via the internet. Things like being able to renew your driver's license online, to be able to look up some of your local city and county services, things like that. They're very good about moving some of that stuff online. I don't know about today. A lot of other states have really ramped stuff up, so I don't know where we fall out today. But at one point, Texas was very good in that area. Any questions so far? Okay, I think the end of the chapter, is getting close. No, maybe a little bit more. Starts talking about collaboration. This is why there's a team component in this class and really in a lot of the classes. Collaboration could occur for a variety of reasons. It may occur just for a single project. Maybe you just got something that needs to be done. You need different perspectives on it, so it might be a short-lived project. Or maybe some kind of long-term process, some kind of sitting committee that sticks around for a long period of time and handles problems as they come up. They can be informal or they can be formal teams. So teams that are established and, again, they're designed to handle a particular problem as it occurs, or maybe they're informal for a problem that pops up every now and then that's always different, that's always unique. So collaboration can occur for a variety of reasons. Growing importance of collaboration, changing nature of work, growth of professional work or interaction jobs, changing organization of the firm. A lot of different reasons why collaboration is important. There's a lot of benefits from it. So when we talk about this, in some ways it's hard to imagine that you can collaborate and end up with better productivity, better quality, better innovation, better customer service, all those types of things. And there is a balancing act. If you get too many people together, you're not going to get any work done. So you have to understand that when they talk about collaboration, you can't just throw 500 people into a committee and expect to get anything done. But if you get the right people together in the right quantities with the right leadership, you can actually turn that into a much better functioning group than if you had individuals making a decision. So things like productivity, they can work together to achieve smaller parts of a process more quickly and do a better job of it, so you can have better quality. Because you've got people brainstorming, working together, maybe one has a little bit of an idea, but it's not a great idea. Somebody is able to take that, though, and tweak it, and it becomes better and better and better. Whereas if you just had the one individual, it's not that great of an idea. So innovation becomes better. So there's a lot of things that you can, a lot of benefits that you can get out of collaboration if it's done properly. And I think that's a key that they really didn't hit home about in the book that much, but be aware of that. So it talks about some of the requirements. You have to have the capability, and you can use technology to really help. You put those two together, and you have some type of a collaboration quality. If you're not using technology, it's not to say you can't collaborate. It just makes it much more difficult. And some of that, the ability to collaborate, you're not able to collaborate in some instances. So if you have issues of time, of distance, for example. And we'll talk about that in just a second. So building a collaborative culture and business process. It wasn't something that it comes natural to businesses in a lot of cases, especially older businesses that have been around a long time, because they operate in kind of this, command and control type mindset. That as a boss, I'm supposed to tell you what to do, and you're supposed to do it. Don't ask why, do it because I said. And that's great if the boss is right. If you need a decision that needs to be made very quickly, and it's a decision that the boss has good knowledge about, things like that, chances are pretty good he's going to make the right decision. But at the same time, if it's a more complex problem, maybe he doesn't. Maybe a team would be better approach. Collaborative business culture, senior managers rely on teams. So it's a different mindset for the organization. Instead of that boss making the decision, maybe the right one, maybe the wrong one, he becomes a manager of these individuals, and it's their task with coming up with a solution. So his job is then more of a cheerleader type role of trying to get these people together and say, this is the problem. You guys come up with a solution, and you're going to support their solution. You're going to pitch their solution for them. And that, instead of making the decisions, he's working with the team. So some of the technology for collaboration and teamwork, 15 categories. It talks about a lot of different software tools. And it goes through the book, in the book it goes through and it talks about quite a few of these. Work scheduling, collaborative writing, event scheduling, file sharing, video conferencing. It talks about a lot of these different types of collaboration tools. We saw that one on video conferencing, that video last week. Kind of gives you an idea of some of the things that you can do with technology. Other things, social networking, we forget about, but it's a great way to share information. Who's heard of LinkedIn? Quite a few. Good. Facebook, but really more for professionals. So the social networking can be very important in terms of sharing information, identifying potential leads, potential contacts. Wikis, good way to, Wikipedia is the obvious one, but there's wikis on everything, and it's a good way you can set up your own private wikis in order to be able to share information with a team if you want to. Google, there's a lot of Google stuff where you can create your own wikis. Virtual worlds, internet-based collaboration environments, virtual meeting systems, Google Apps, all that kind of stuff. So, if you have some kind of a need for collaboration, you really need some way of evaluating what's going to be the best solution. We talked about that a second ago. All these different types of collaboration tools, and there's a lot more. These are just some of the ones that are out there. You've got all those tools, but how do you know which one to use when? And really a nice way of looking at that is based on a little two-dimensional matrix, time and space. Are you in the same physical location as the people that you need to collaborate with? Are you in that same physical space at the same time? You need to know what you're going to be. Are you in a different place? Are you at a different time? So if you think about those two dimensions, you could start to evaluate the different technologies that exist and kind of narrow it down so you can focus on the relevant ones. So 6 steps in evaluating the software tools. What are your firm's collaboration challenges? Are you in the same place? Are you at the same time? What kinds of solutions are available? Analyze the available products, costs, and benefits. evaluate security risks, consult users for implementation and training issues, and evaluate product vendors. So you kind of think of it like this. So at the same time, same space, face-to-face interactions, things like decision rooms. So a location where people can get together to brainstorm, to talk about the issues and collaborate. Maybe large displays around the room. Groupware, shared table, wall displays. All these various things that you can use to share information with one another. You can draw out diagrams that you need. Things like that. As opposed to different time, different place, email. Video conferencing doesn't really work if if it's a different place it does. If it's a different time it doesn't work. You can leave video messages, but video conferencing doesn't really do you a lot of good. Bulletin boards, blogs. Blogs work out great because you can post your information and you can go to bed. When somebody on the other side of the planet wakes up, they can read what you posted. So it's a way to, in a different space and a different time, to still be able to collaborate. And so you can think about those collaboration tools based on your needs. Are you in the same time or are you in the same place? This is where the chapter kind of finishes up. It talks about the organization of the information systems department in an organization. So if you're a small organization, you don't really have much of an information systems department. It might be one person. It might be one person part-time. But if you're a little bit larger organization, you're going to have some kind of a structure, and a lot of times you'll end up with, some of your C-level executives, maybe a CIO, Chief Information Officer, a CSO, CKO, CPO. Some of the higher level executives that have responsibilities. At one point, the CIO was much higher up in the organization, probably never been as high as they should be, but since the .com bust, they've really kind of been relegated further back down in the organizational chart. But they still have a lot of responsibilities, especially when you start to look at government regulations, things like Sarbanes-Oxley. They have real responsibilities that affect the organization. So even though the CIO reports in many cases to the CFO, the Chief Financial Officer, many of the decisions that CIO is making are as a result of government regulation, and those regulations or those decisions get passed up the organizational chart because they're government regulations. You have to comply with them. Some of the other people involved in the information systems department, programmers. Those are those people that sit in the little cubicles and talk in tongue. Systems analysts, those people I was talking about at the beginning, kind of do the translation between the programmers and the business people. They really are kind of the people that have their pulse on the organization because they do understand information technology and they do understand marketing and production and all those types of things because they have to. They may not know the intricacies of marketing or production or whatever, but they do have to have at some level an understanding of all the various aspects of a business so that they can talk to the business people and they can talk to the programmers to be able to make sure that you're getting systems that are useful to the organization. Then you've got information systems managers, which are similar to systems analysts in terms of having to have that understanding, but they become responsible for the day-to-day operations of the IT infrastructure, making sure that the computers power up, that software updates get pushed out, that the applications are on the right computers, that security processes are being followed, things like that. And then end users is a big deal. Representatives of other departments for whom applications are developed. Those are the people that ultimately you're providing these services to. If you're the information systems manager, you're providing the computer there for that salesperson to be able to keep track of their customers. You're providing that computer system there for the production personnel to be able to produce whatever it is that they're producing. And they've got to be involved throughout the process. If they're not, like we were talking about earlier, you might produce a great system that's going to be able to track the customer in every way imaginable. But if the end users don't like the way it looks, they don't like the way it processes from one screen to another, the things aren't laid out in the right order, it'll drive them nuts. They won't use it. What's the point in spending all the development time and costs if you're not going to use it? So you have to involve end users throughout the design process really very early on. That's something that if you're in a systems analysis and design class, it would be stressed a lot to you. All of this kind of fits in this scheme of IT governance, and that's a term that's really been kicked around a lot since probably WorldCom type stuff, early 2000s, the dot-com bust and all that kind of stuff around the same time. It's something that has been stressed a lot because of this huge investment that we have in information technology. Organizations throw money at organizational technology. Remember that graph that we saw last week? The assets that organizations are investing, more and more that's going into IT, going into information systems. But at the same time, organizations need to get bang for their buck. They have to. They can't just throw money at it like they were doing before the dot-com bust. And that's where IT governance comes into play. It's trying to make sure that we're investing in the right technologies. We're not just wasting this money. There was a study that came out that showed a couple of years after the dot-com bust, significantly more money was being spent on e-commerce than it was right before the dot-com bust. You didn't hear about that in the press, though, and it was because organizations were being much more frugal about where they were still investing. They were investing significant amounts of money in it. They were just being much more selective in their projects. They were investing more money in select projects rather than just sprinkling lots of money in different places. So IT governance basically tries to make sure that there's a structured process to go through to approve projects, to manage projects, and with decisions kind of predetermined as to how you're going to fund those projects and what's going to happen if those projects fall behind schedule, things like that. So you don't get into those situations of, well, we spent $3 million, let's walk away. No, you need to have a plan up front of what you're going to do, things like that. And that's it for that chapter.